Good morning this Wednesday, the 21st of May. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed lower on Tuesday as investors await clarification on the tariffs front, following a strong rally in recent weeks. The S&P 500 fell 0.4% yesterday, or overnight. The Dow Jones lost 0.27%, and the tech-heavy Nasdaq ended the day down 0.38%. The recovery rally since Trump announced negotiations were underway with China has seen the S&P 500 rally more than 20% since hitting a low in April. So investors have just pulled back on Tuesday in anticipation for further clarification on the tariffs front. In Europe, overnight markets closed higher as strong corporate earnings results in the region boosted investor sentiment. The STOXX 600 rose 0.7%, Germany's DAX added 0.3%, the French CAC gained 0.75%, and in the UK, the FTSE 100 ended the day up 0.9%. Across the Asia region on Tuesday, markets rose as investors assessed the latest rate cuts in the region, including out of the RBA in Australia and the People's Bank of China trimming the one-year loan prime rate from 3.1% to 3% and the five-year rate to 3.5%. China's CSI index rose 0.57% on Tuesday. Hong Kong's Seng gained 1.5%. Japan's Nikkei added 0.8%, and South Korea's Kospi index ended the day just flat. The local market closed 0.6% higher yesterday as investors welcomed the RBA's 25 basis point rate cut amid cooling inflation and escalating cost of living pressures. The RBA cut to 3.85% came despite the latest inflation reading and labour market coming in hotter than expected and out of favour for a rate cut. However, the overall picture is still positive in Australia for economic stability and taming inflation over the long run. Rate-sensitive sectors like the tech and real estate stocks led the gains yesterday, with the sectors rising 2.3% and 1.4% respectively. Technology One soared over 10% on Tuesday after the software giant increased its interim dividend by 30% on the back of strong revenue growth in the first half, while Telstra shares also rallied after the telco giant said it would be raising prices, which is great for investors but not so great for customers. On the commodities front this morning, oil is trading 0.22% lower at $62 a barrel. Gold is up 2.04% at $3,288 per ounce, and iron ore is down 0.08% at $100 per tonne. The Australian dollar has weakened against the greenback overnight to buy 64.16 US cents, 92.75 Japanese yen, 48.22 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the midweek trading session here in Australia, the SPI futures are anticipating the ASX will open the day up 0.62%, extending on Tuesday's rally. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained the hold rating on Technology One and have raised the 12-month price target on the software giant from $31 to $35.50 following the release of first half results, including revenue and profit before tax topping Bell Potter expectations and FY25 guidance coming in slightly lower than Bell Potter was expecting. The analyst maintains a hold rating as the new price target is a modest discount to the current share price. And Bell Potter has initiated coverage of AML 3D with a speculative buy rating and a 12-month price target on the company of 30 cents per share, with the analyst seeing the company is at an inflection point given accelerating demand from US defence industrial base, driving material increase in system sales over the next 3 years. AML 3D is a welding, metallurgical science, robotics and software business that produces automated 3D printing systems that use wire additive manufacturing technology. Lots of words there. And that's all for this morning. I hope you have a wonderful day and happy investing.